daily time frame, I'm bullish. We have a breaker here on the daily. We broke this high here with fair value gap, strong gap, and then we break this high with a fair value gap on Thursday and closed above it. And so it dips down into this breaker, which by the way is still working in this breaker, which is why the market turned around here. This is the inverse gap here on the daily, comes right down to the middle, a little below it, wick below it, shoots up above this with that gap. And now that I've broke all that down, we can kind of delete all of this and focus on this week. So we have buy side up here at 30,600 exactly. And then as you can see on Friday, the close left this gap, or the low of Friday left this gap here open. So we broke this high with a fair value gap. So what I would be expecting this week is a retracement down into this gap, this wick, which this green marker here is the middle of this wick from here to there. And then you have this wick, that's something else. And you can see that they're about the same. So in between this wick and this wick, there's a little gap in there. That's where I would anticipate the market turning around and reversing the other way. To complete this breaker here, at least one standard deviation, which is the most common base hit in the world. And then after it does that, we can anticipate over the next coming of weeks 30,600 and the market continuing up in this breaker as it is bullish to take out these equal highs at 30,975 and a half, and then up here to all-time high, which would be 31,101. And the reason you can be confident here is, and now we're going to shift over to talking about, but anyway, the S&P, which right now is significantly stronger than the NASDAQ, it's already broken its high, its all-time high, and it never came to break the June 11th low at 7,294 and a half. So that's a divergence, smart money concept, and that is why the market is bullish. And zooming in on for the ES traders, the ES close and low left this gap here. That gap there with this volume imbalance compensates right here. And then you have this wick there, and that bottom lines up to the halfway mark of the low of this candle at 7,796 and a half, and this close at 7,766 and 3/4. So looking for higher prices here. 3 little PD arrays, this gap, obviously halfway point, 1 order block, and then last this wick, and of course this wick, which you can see. Look at that. See how it closes above it here, and then it comes back and confirms it again there. So I would anticipate some type of dip lower below this low, focusing on this gap here with this volume imbalance, and this order block to extend higher. And then you have a strong gap, which this just seems like a breakaway to me. Good to go possibly up to 7,906 even. That is the anticipation in the long-term macro, if you will, for NASDAQ and yes, so I would focus on longs this week. Thursday, Friday, probably be best as far as this week goes. So, that being said, we gone.